Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Wednesday the 12th of February in London. I'm Stephen Carroll. Coming up today, the Chancellor Rachel Reeves faces another growth downgrade as British recession fears mount. UK taxpayers face a £150 billion bill for the Bank of England's quantitative easing programme. Plus, Trump's tariffs and Germany's troubles collide in Hamburg. We have a special report on how protectionism is playing out in the key trading hub. Let's start with a roundup of our top stories. The UK's Chancellor Rachel Reeves faces a new risk of having to make spending cuts after the UK government's fiscal watchdog downgraded its growth forecast. Bloomberg has learned that the Office for Budget Responsibility's first private report to the Treasury puts the government on course to break its own fiscal rules. The forecast leaves Reeves facing a small deficit when the Office for Budget Responsibility delivers its update on the UK economy on the 26th of March. The leaked report adds further weight to the view that the Chancellor will need to raise government revenue in March if she's to maintain her fiscal rules. UK taxpayers will end up paying £150 billion due to losses in the Bank of England's quantitative easing programme. The central bank estimates its plan to sell its bond portfolio will leave it with a hole the size of Britain's entire defence budget for 2.5 years. The net loss is a purely financial measure and does not reflect the economic and social benefits of QE. The UK's central bank chief is warning against the dangers of multi-manager hedge funds. That's as the body ramps up its monitoring of non-bank finance. Bloomberg's Tiwa Adebayo has more.
Ruthless hedge fund risk management policies pose a threat to financial stability. That's according to Andrew Bailey, who said multi-manager funds deleverage rapidly in stress conditions, which can exaggerate market moves, in a speech yesterday. Whilst the practice allows the firms, also known as pod shops, to protect themselves, the Bank of England governor highlighted its potential to create risks to the financial system. The trend is partially responsible for global regulators paying closer attention to rapid growth in finance activity outside of banks. Recent research from the Bank of England found hedge funds, asset managers and pension providers could be underprepared in times of crisis. In London, Tiwa Adebayo, Bloomberg Radio.
Now, Andrew Bailey's comments come as one of the world's most successful multi-strategy hedge fund founders, Ken Griffin, criticised Donald Trump's approach to tariffs. Speaking at the UBS Financial Services Conference in Miami, the Citadel CEO said the US president's trade plans dull the country's competitive edge and breeds mistrust against allies. There was praise, though, for Elon Musk's efforts to curb waste in Washington with his Department of Government Efficiency, which Griffin said he was grateful for.
This is a man who slept on the floor of his factory to make sure Teslas got produced. He will do what it takes to win. We want people who are in Washington who will do what it takes to help the American taxpayer and the American people win.
Ken Griffin's comments come as Musk and his Doge team have faced criticism for their heavy-handed approach. Democrats have questioned the Tesla CEO's unprecedented influence despite not being an elected official. The Citadel founder spoke as President Trump directed agencies to comply with orders for job cuts led by Elon Musk's Department of Government Efficiency. A White House fact sheet seen by Bloomberg shows that agencies will be permitted to hire no more than one employee for every 4 that leave. Musk, meanwhile, made a rare appearance in the Oval Office to defend his approach, which has involved obtaining access to sensitive computer systems and employee data.
Your tax dollars need to be spent wisely on things that matter to the people. I mean, these things, it's just common sense. It's not draconian or radical, I think. It's really just saying, let's look at each of these expenditures and say, is this actually in the best interest of the people? And if it is, it's approved. If it's not, we should think about it.
It's Elon Musk speaking there. He also used the address to increase his attacks on federal officials and judges he says are stalling Doge's progress, calling for impeachment and accusing some of being corrupt and activist. The Federal Reserve Chair Jerome Powell says the central bank doesn't need to rush to adjust interest rates. Speaking to the Senate Banking Committee, Powell reiterated his belief that the central banks should stay patient before lowering borrowing costs further.
As the economy evolves, We will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly.
Bond yields climbed after Jerome Powell's comments, but moves in rate bets were more muted and fewer than 2 cuts are priced in for all of 2025, with the next cut from the Fed not expected now until September. Those are your top stories on the markets. We saw on Tuesday Treasury yields rising 4 basis points. They're up another 1 today on the 10-year to 4.55%. That's after Jerome Powell's comments. Looking at the equity markets, most of the big tech names dropped on Wall Street trading yesterday. Meta, though, notched its 17th day of gains. Intel also surged by 6% after J.D. Vance said the Trump administration will make sure the most sophisticated AI hardware is made in the United States. The dollar weakened somewhat as markets await an anticipated announcement on reciprocal tariffs. 2/10 stronger today on the Bloomberg Dollar Spot Index. The yen declining for a third day, dropping 0.7% to 153.58. And in Hong Kong, we have seen tech shares rising, particularly Alibaba, gaining as much as 8.6% on reports it's working with Apple on artificial intelligence. In a moment, we'll bring you more on the gloomy outlook for the UK economy, plus a view from Germany's biggest port of the rising trade tensions with the United States. But first, another story that caught my eye this morning, which can be taken either in an inspiring or slightly concerning way. Our opinion columnist JP Spinetto has been writing an article with the title, "I Just Found My Nuclear War Hideaway," which might sound quite bleak, but actually it's somewhat of a love letter to the Argentinian province of Mendoza, known for its fine wines and astonishing beauty. JP pointing out that it's also a good place to escape in the event of any escalation of the turmoil in the world. It's one of the safest places in the event of a nuclear war, but also has mineral wealth, renewable energy, and of course, wine, and 4 Michelin-starred restaurants and skiing. If you're not sold yet, JP writes, you don't have to be a catastrophist to savour all that Mendoza has to offer. But if a nuclear balloon goes up, that's where you'll find him. You'll find the full story on Bloomberg.com and on the terminal. Well, let's turn now to bring you more on the UK's fiscal challenges. Sources have told Bloomberg the preliminary forecast presented to the Chancellor from the UK's budget watchdog saw a downgrade to growth, leaving Rachel Reeves at risk of breaking her own budget rules. Now, Bloomberg's survey of economists expects to see a contraction of 0.1% in GDP for the 4th quarter in figures which will be published tomorrow. Our market supporter Valerie Teitel is here with more. Now, Valerie, first of all, on the OBR forecast, there are several more updates of this forecast to come before, of course, they're publicly published at the end of next month. But if the current numbers bear out, according to our reporting, Rachel Reeves will have a small deficit on her current spending plans. How would that go down with markets?
Well, look, it's clearly not a positive for those holders of gilts out there. They really want to see some growth being driven by this extraordinary amount of borrowing that the new Labour government is proposing. But on the flip side, the positive news to this is that the OBR in some way is just catching up to economists. They're catching up to the Bank of England. Economists warned back in October that the OBR's growth forecasts were already looking too rosy. And since October, just last week, the Bank of England has also downgraded their growth forecast. So in some way, the OBR is just catching up to the market expectations for weaker growth for the UK. So no new news in that, guys. But this does, again, just heap a bit more pressure on to Rachel Reeves, what she will do in that spring budget announcement in order to try to have the UK's debt trajectory on a stable footing, in order to try to convince the markets that this extra borrowing she is doing will have some returns for growth in the future.
So what sort of action would investors then be expecting from the Chancellor to maintain market confidence if, as these first projections would seem to be indicating, that there would be a deficit in the current spending plans?
I mean, look, she has to equalize this equation somehow, either cutting spending or raising taxes, but she's already told us us that she does not want to raise taxes again. So I guess the focus goes to on what kind of spending cuts that she could announce in order to give herself a bit more fiscal headroom. She is in a tough pickle in that, guys. We'll see what she manages to do. But again, she is in a tough spot in order to try to somehow equalize this equation to convince markets that this extraordinary borrowing that the government wants to do, which is the second largest amount of borrowing outside of the extraordinary COVID spending, is going to be worth it down the line in order to drive growth. That growth fundamental, she really needs to see, the market really needs to be convinced that this will have some payoffs in the future.
Yeah, indeed. Of course, the government argues that the borrowing is necessary to, repair the public services and to create growth in the future as well. Something that perhaps would have been unwelcome news in this occasion is what we heard out of the Bank of England yesterday as well, that taxpayers are going to end up paying £150 billion to cover the losses from the Bank of England's bond buying programme. Is that figure a surprise?
Well, look, when the Bank of England did quantitative easing, yields were at multi-decade lows, and now they're trying to reduce their balance sheet. They're selling these gilts, and yields are a lot higher. So they are crystallizing these losses when they are selling these gilts to the market. So in some way, not a surprise that, yes, there is losses. Again, it's just not, I guess, a nice number for the government to be confronted with. It's 2 years of defense spending for the UK. But in some way, it's not a surprise. The Fed is dealing with the same thing. So is the ECB when they're trying to wind down their bond purchases, their bond portfolios. But what is interesting, though, is even though yields are at these highs, we're still seeing great demand for gilts in the recent syndications and auctions. There was a 10-year gilt syndication yesterday. They issued $13 billion of a new 10-year bond. It received a record amount of orders. So these higher yields are tempting investors back in. The market has been calm of late. That volatility that we saw early in January has kind of been put to bed for now. So investors are really tempted back into the gilt market. Let's hope that no surprises from Rachel Reeves, or no surprises from the OBR, from the Bank of England. Let's hope this all keeps on a steady pace so those buyers of gilts will be tempted back into the markets, because we know that the UK is very reliant on foreign investment, very reliant on others coming into the gilt market to buy gilts. So I guess it is very, important to note that the demand is there at the moment.
Yeah, of course, that famous kindness of strangers line as well. This amid, of course, the uncertainty we've seen elsewhere on markets as well, with yields rising across Europe yesterday as we heard the latest announcements from the EU in terms of potential response to trade tariffs as well. Another part of this story to watch. For now, Valerie Teitel, our markets reporter, thank you. Well, we're still waiting for details of how exactly the EU plans to respond to Donald Trump's tariffs on steel and aluminium after Brussels promised that it would hit back. The escalating trade tensions are adding to uncertainty in Europe from Germany's federal election, which is in less than 2 weeks' time. Our senior editor, Alan Crawford, joins me now for more from Berlin. Alan, good morning. You've been reporting from the German port of Hamburg, one of the most important in the EU. How worried are people there about the risk of a trade war with the US?
Morning, Stephen. Well, the mood there is certainly one of trepidation. I mean, this is a city that's been built around trade, that it was granted a royal charter back in the 12th century, and essentially the city built up around the port. So in some senses, it's seen it all. They're not panicking. The mood there, and we spoke to the Port Authority, the Chambers of Commerce, to Hapag-Lloyd, then they don't tend to react just on day-to-day news. Certainly, they're trying to model the impact of these tariffs, and all of them said it's extremely difficult to do. They don't yet really know the impact, but they all agree that any imposition of extra sand into the gears of global trade is a bad thing for places like Hamburg.
What's the broader risk to the German economy from an escalation of this trade dispute with the US? Germany is one of the countries that exports quite a lot of steel to the United States.
Yeah, again, I went back and I spoke to the Port Authority to ask specifically that. Again, it's uncertain, but I think it's important to remember that Germany, despite all of the stream of bad news, it's still the world's third biggest economy after the US and China. And as you said, it's an exporting powerhouse. The economic model is somewhat different to the UK with services there. And here it's still heavy, a lot of manufacturing. And 2/3 of all of this output goes through Hamburg. I mean, for example, it was pointed out to me that 1 in every 3 of these containers from the massive ships that come in has either come from or is going to China. So that it's an indication that they're completely dependent, at least Hamburg and Germany at large, to a large extent, they're dependent on global trade flowing, so that both Trump's tariffs, but also the broader movement at the moment towards protectionism in countries worldwide is a bad thing for exporting powers like Germany.
And I mentioned the election upcoming as well. How are these issues playing into the campaign?
Well, Hamburg is somewhat unusual. Again, you tend to hear bad things about Germany at the moment. Hamburg is wealthy. It comes at the top in terms of GDP per capita of the 16 states in Germany. You go to Hamburg, it looks wealthy, and the port is just a hive of activity. But it's also unusual in the sense that it's a bastion of support for the Social Democratic Party of the Chancellor, Olaf Scholz. But interestingly, whereas a lot of the narrative at the moment is about the rise of the far right in Germany, they're really nowhere in Hamburg. So in a sense, they were saying that the most important thing for them is to become more competitive, and that they feel will help reinforce the political centre.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.